So this is our focus on major pairs. Okay, technical levels to watch. Beginning, of course, with the world's most popular currency pair, euro-dollar, moving up on the dollar's weakness currently 106.80. 107.20 was the high seen yesterday, and it is immediate resistance. I would also mention higher above the swing high of 108.60. Okay, that is another high level up there, but we would need a more significant break. To the downside, we have 106.50, 105.20, which supported the pair beforehand. 104.60, I still mention it because this was the multi-year low that held for a long time. Under that, we have, of course, the 103.50 line, which was also important back in 2002. Yes, nearly 15 years ago, when the pair traded at lower ground. So currently, the levels were confined to a narrow range of 106.50 to 107.20. Moving to pound dollar, this chart is already much more exciting. Let's zoom in a bit. Look at this weekend gap. We fell under 120, so the line to watch, the line in the sand on the bottom, is 119.85. Okay, also a bit symbolic because these are the lowest levels. If you exclude the flash crash of October, the lowest levels since 1985. Okay. Moving higher, we had a temporary run in this low range, the 120 handle. 120 is the next level to watch. 122, a round number, which provided support, as you can see, just around the turn of the year. It's followed by 123, which worked as a round number, worked in both directions. And the level to watch is yesterday's high, 124.15, actually seen in the Asian session. Above that, if we expect more high volatility in pound dollar, then we have 125.10 to the top side, and then 127.30. Okay, let's move to dollar yen. The weakness of the US dollar is well reflected in this currency pair. So here we are, currently 113.33, support here at 112.50, the level that we've seen the pair bounce at. Further support, we'll need to zoom out a bit before the big dollar rally. So we have 111.40, okay, and then under 110 we have 109.50. Okay, to the top side, levels that we've seen recently, 113.60 and 115, the round number, which provided support earlier in the year. Moving higher, 116, another round number, 117.50, high seen last week, and 118.70, which is the cycle high. Moving to commodity currencies, the dollar CAD, Canadian dollar, taking advantage of stable oil prices, I would not say rising oil prices. And of course, what we're seeing here is the weakness of the US dollar. So currently 130.70, very close to the 130 level, which is of course support. If we look even lower, we'll have to zoom out even more because dollar CAD didn't have such a good run. Well, had a good run, but the Canadian dollar has suffered. So if we look lower, we have 128.30. Okay, so a big gap there between 130 and 128.30, and then 127.70. So these are already older lines. But if we move to the upside, we have recent lines, 130.80, very close to where we're trading. Immediate resistance, 131.80, also 80, 133.20, and 133.80. So I see this 80 as a recurring theme here. The highs of 136 look far away at the moment. Let's talk about the Australian dollar. Quite an impressive recovery, big V-shaped recovery. So we fell to a low. Let's begin from the bottom, 71.60. Moving up, we have 72.50. I think these lines are self-explanatory on the chart. 73.10 was the low back in December and November. Moving up, we have 73.75, which was support in December. 74.50, a recent line of support. 75.20, a high that was already broken, and the recent high of 75.70 is the next line of resistance. Higher, we have 76.50, 77, a round number, and to the top there we have 77.77. Okay, and let's continue with its neighbor, the Kiwi. Also here, more or less a V-shaped recovery. from the lows back above the round 70 number, currently hugging 72, 72.20 resistance for the Kiwi dollar. Higher we have 72.65, 73.60, and 74.10, which was a swing high up there. To the downside, we have 71.80, very close by, not such a strong line. Further support, much stronger, 71.40, 70.40. Then we have 69.50 under the 70 line. Note that 70, despite being a round number, in this case it is not support. Okay, so 69.50, then 68.20, and very close by 68.50. Okay, so that's the Kiwi, and we'll complete the roundup of major pairs with the Swiss franc. So just above parity at the moment. We're seeing it dangerously reach the parity line, but holding above it at the moment. Parity is, of course, support here. Resistance 100.60, 101.40, and 102.12. Remember that the Swiss National Bank intervenes here below parity. If we have further depreciation of the US dollar, note that 99 level, 98.50, and 98.20. So a zone of support there. But currently the range is 1 to 100.60. Okay, so this concludes our technical levels for major pairs.